On the show today, we'll discuss ways to deal with the challenges in mergers and acquisitions here in Africa. As always, you can join the conversation with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Ugudaga. Now, control risk says political risk remains a major concern when it comes to deal making in Africa. Now, the continent saw a decline in volume and value of M&A activities in the first half of 2017 compared to 2016. So how can Africa deal with the challenges in mergers and acquisitions? Tom Griffin, a senior partner West Africa at Control Risks, joins me for this discussion. Thank you so much, Tom, for taking the time out to join us today.
Thank you. Pleasure to be here.
Before we delve into the nitty-gritty, help us understand the state of the M&A market in Africa as it stands today.
Sure. Well, I think it comes as no surprise to anyone that 2017 was a really tough year in terms of the industry, and across the continent, a lot of challenges, a lot of issues. When you look at the pure numbers, I think you saw sort of total deal size go from about 34 billion, reach about 34 billion, which is around half of what it achieved in 2012. So I think a lot of the sort of euphoric messaging, which was underpinned by this Africa Rising story that we've seen over the last sort of 3 or 4 years, quite starkly smacked in the face, and we saw a significant drop both in terms of inbound deal flow, which I think dropped by about 18%, but also outbound, so Africa to the rest of the world, dropping by 44%. So a real sort of tough year, I think, for the industry, pretty much across the board. Some green shoots in terms of different sectors and different progress there, and I'm sure we'll talk about those later. But no, very much a tough year.
From 2012 up until, let's say, 2016, 2017, what would you say was one common denominator across the M&A deal space? One theme, central theme.
Yes, I mean, I think a lot of, you tend to get, similar to what we saw actually in China probably 10, 15 years ago, you get this maybe blind optimism around deals and around the sort of next big thing, frontier markets. And that was really, I think, what characterized a lot of the activity within the marketplace, was it sort of buoyed by this energy and this recognition that there was huge potential in Africa, and there remains that as well across a number of different sectors. But as to whether anyone is able to sort of extract that value from those deals, I think the examples are few and far between. So
it was blind optimism, but there is potential. We don't know how it's all going to come together, but we're going to get in there and see how it all works out.
I guess so. I mean, I think, as a business, so we Control Risk, we've been operating in Africa for over 40 years now. And you have to be sort of glass half full about the opportunity that we see across the continent. Yes, there are challenges. Yes, there are issues, none more so than we see day in, day out here in Lagos, Nigeria. But yeah, there's still huge amounts of opportunity as well.
Okay, let's go into the report. Now, I'm interested in this from 2016, where it says deals fell 13%, but value rose 56%, more than what was recorded in 2015. So we saw a drop in deals, but value went up.
Yeah, so I think you saw sort of quite a high number of transactions coming through, high number of sort of oil and gas transactions, so notably ExxonMobil in Mozambique, $2.3 billion investment into a relatively embryonic sector there. Again, I think 7 of the 12 largest deals across the continent were in the oil and gas sector, and so they tend to be higher value as opposed to, and that obviously distorts the numbers somewhat. But yeah, so that's really the trend that we saw there. But yeah, as I say, still seeing a sort of sharp decrease in terms of the volume of deals across the continent.
Okay, now when it comes to M&A on the continent, it's between South Africa and Nigeria, South Africa being the biggest, but South Africa has had its own share of challenges, and more so for South Africa, political risk and uncertainty. And of course, with the weaker economy, we saw what was going on with ratings agencies and the country's unstable currency at that time. So we know that a lot of that was tied to former President Jacob Zuma. Now there's been a major change in the political scene. We have Cyril Ramaphosa here. The ENC appears to be getting its act together.
Yes.
We're seeing some green shoots in the economy. There's higher projection for growth, GDP growth this year. So I'm thinking, how does that change the mindset of the average deal maker who had sat back took a step away from South Africa and say, you know what, I can't deal with all this political uncertainty, it's just too much for me. I'm going to, just sit on my hands and hold on to my money for now.
Sure. Yeah. No, great observations, and I think you're right. So 52% of the deal flow still routes itself through South African markets. So effectively, if South Africa catches a cold, then the rest of sneezes, then the rest of the continent's going to catch the cold, and that's still going to be the case. So again, you've got a wild distortion of volume and value of deals going through South Africa, going through Kenya, and also going through Nigeria, all of whom have had a sort of similar ingredients of problems. South Africa, yes, has been blighted by first recession in 8 years, currency instability. A lot of oxygen, I think, given to the Gupta scandal. Some of that, I think, fairly heavily politicized. But yeah, just sort of reinforced the challenges around corruption, around integrity risks when operating in that part of the world as well. But I think, yes, sort of positive signs, positive gestures being made within South Africa, particularly in relation to some of the policy frameworks around black empowerment initiatives, a little bit more stability in the mining sector. I think slowly but surely you'll see a little bit more comfort into that sector, but these things take time, and people have long memories with these sorts of problems as well.
Interesting. But for Nigeria, similar case also. I mean, 2015 up until now, we're going into an election cycle this year too. So obviously, I'm thinking political risk will also be top on the table for deal makers. Yeah,
and so it was interesting in terms of political risk. So one of the key outputs from the survey was, I think, 84% of those responding deemed political risk to be an issue. When we asked the same question last year, it was around 40%. So it seems that political risk is very much coming onto the agenda. Yeah, in terms of Nigeria, it's sort of one of the poster childs of political risk, and that's very clearly going to be here to stay. Buhari's put his hat into the ring finally, and you've got to think that power of incumbency, probably with a strong wind in terms of some regulatory reform, some bigger projects and investment that's going to come into the region. We think that he's going to be the likely forerunner in the process.
Now, usually for a typical M&A or deal maker who finds himself in this situation, what is the first course of action? You find yourself in this, you feel like you're walking into a potential storm.
Yeah.
They've done that, for Nigeria, it's happened in 2015, we came out of it, so there's another potential storm, in quote, that they could be walking into 2018. Yeah. So what's the first instinct? What is the first thing a deal maker would do?
Sure. So I think it's sort of 2-3 key areas. So one is understand the sort of the value of time. We saw heading into the last election cycle, deal after deal, particularly in the energy sector, where we knew that they had a cutoff point around sort of September prior to the February-March elections. And so being cognizant of that was absolutely critical. But also having a very eyes wide open approach to what are the risks, what are the challenges, who are the partnerships that you've built. Again, I think you've seen out of this administration, a lot of people who backed the Good Luck Jonathan ticket have actually really fallen on hard times in terms of potential deals and in terms of their involvement in country. So again, it's eyes wide open to the challenges, but also understanding trigger points and recognizing that the only inevitability in this process is the unpredictability, and understanding sort of trigger points and sort of what if scenarios. What if a third party comes into the race? What if there's again another inability to properly govern by Buhari? Those sorts of questions. Smart companies again are taking a forward look, peek around the corner at what do they think is going to happen. How's that going to impact their business in the short term, but also in the longer term.
But what would be a fallback? Maybe some sort of like a plan B Well, of course, we're not hoping for the worst outcome.
Yeah.
Nobody hopes for that. But a plan B in case they say, okay, if it all goes south,
yeah.
what do we move on to other markets? What other markets are on our radar?
Yeah, and so I think again, it's having, we work with a lot of companies across a number of different sectors, and they'll horizon scan across Africa. So if you look, for example, huge amounts of deal flow and activity into the Mauritania, Senegal basin. I've just come back from Mauritania. We've just opened an office in Senegal. So we see huge amounts of opportunity there. But also as well, it's understanding what are the risk profiles, what are the different drivers of instability across each of those different locations. Senegal, relatively stable, easy to do business, relatively easy to operate. And a nice place to do business. Compare that maybe with Mauritania, but also as well, Nigeria very quickly gets into the it's all a bit too difficult bucket in terms of sort of operating here in the short, medium, and long term as well.
I'm just thinking coming from maybe sort of a Western market where the issues there, challenges there are so different. When it comes to Africa, the major issues are, conflict.
Yes.
You have to decipher the political scene, especially if that country or that market is going into an election year. So it's all about political risk, and like you also pointed out in the survey, in the report, issue of transparency and compliance considerations around regulatory issues also. So yes. I suppose my question is it usually a big shock? Or have those deal makers gotten used to the fact that when it comes to Africa, deal making here in Africa, for now, those are the risks, those are the challenges that we're confronted with?
So I mean, let's not forget, you look at how sort of geopolitics plays out within the Winter Olympics. You look at the conflict that we're seeing emerge in Syria. You look at the sort of instability across the Pacific Rim as well with the Northern Korea conflict there. You look at the sort of constant twittering of that disruptor-in-chief, President Trump, and actually sat here in my house in Lagos, I feel sort of relatively calm and normal. So political risk is everywhere, it's everywhere. It's here to stay. Again, I think businesses operating in Africa within Nigeria are actually a relatively consistent and stable and resilient at dealing with these sorts of risks. So for them, it's just another challenge that they add to their risk register, and they add into their risk management processes in the same way they might look at infrastructure challenges, foreign currency risk issues. It's just another one to add to the list.
Just another one to add to the list. We are discussing ways to deal with the challenges in mergers and acquisitions in Africa. Still with me in the studio is Tom Griffin, a senior partner, West Africa at Control Risks. Tom, thank you for your time so far.
Thank you.
Let's go into the sectors where we've seen the most M&A activity. Let's start with, we could come from 2017 into outlook for 2018. I think we should start with 2018. So the report also points to some optimistic signals, some bright spots that we could see. But let's talk about opportunities in the sectors. Give us more insight about that.
Sure. So I think certainly what we're seeing in the popular press is huge amounts of sort of heat and speculation around fintech, around technology. You look in a place like Nigeria, there'll be 100 million internet users in the country within the next year. That's more than the UK, France, and a whole host of other developed nations as well. So again, there's always going to be excitement within that realm. I think, again, we're seeing a little bit of interest in the telco markets, specifically recently with Eaton Towers, $1.5 billion valuation, with Helios in terms of and the interesting element there was a dual listing between Johannesburg and London. For some reason, that particular deal has been shelved for the moment. But outside of those two, so fintech, tech, I think again it's really going to be around the stalwarts of the M&A space as we've always seen. The survey pointed to the sort of the clutch of sectors, if you like. So really focusing on energy and oil and gas.
That will be mostly for between South Africa and Nigeria.
So yeah, well, not necessarily. So again, 32% of respondents said that they were likely to make investments into that sector. Yes, I think South Africa from a mining perspective. I mentioned earlier in the session, the interest around West Africa within the oil and gas space, but equally as well. I mean, Angola, the shift that we've seen since Lourenço's coming to power in September of last year is literally night and day. Whether it's in terms of ease of doing business, the ability to remit funds, repatriate funds, the ability to get into the country in terms of visa on arrival. Again, the business climate is massively favourable we're seeing at the moment. So I think you'll see some opportunity there.
But Nigeria is also taking some steps in that direction to ease of doing business, and we recorded some success. Would that come into consideration for this year?
So yes and no.
Or it's not enough?
Yes and no. And again, yes, being able to get a visa on arrival at the airport is all very well and good and makes good food for the press. But actually, I think it's much more systematic than that. If you look at the PIGB as it is now, yes, it's sort of slowly coming into force. But again, it's questionable whether that's enough or sufficient when you're looking at...
So you think deal makers will want to wait for something more concrete or see how it works going forward before they jump in?
Yeah, I think so. But that said as well, again, elections provide a lot of incentive to governments and to business to actually get deals done. And that's certainly what we're seeing is a lot of energy in the marketplace and a lot of excitement in the marketplace, people trying to get deals done as the country seeks to build maybe funding for the elections, but also seeking political capital to sort of grease the cogs, if you like, of that political machine as well. So yes, as ever is the case with Nigeria, it's 2 steps forward and maybe 1 step back.
Okay, speaking about opportunities in markets, the consumer goods space or the consumer market here in Nigeria is quite a huge one, and many times I speak to PE venture capitalists and they all talk about it's a big space, it's a huge market, there are opportunities, yes, there are a couple of challenges. So isn't that with the consumer space, is it not a key focus? Yeah,
no, absolutely, and it sort of sits within those top 2. So 32% for the oil and gas industry and energy, 28% of those respondents again looking at the consumer goods industry. All of the sort of challenges that I spend my life talking to clients about, all of the risks and quite sort of lofty political risks and integrity risks inherent with operating in the region, they all pretty quickly get trumped by when you look at the sort of macroeconomic fundamentals, both at the end of your nose, but also looking further into the future. Whether it's that burgeoning middle class, whether it's the rate of urbanization, so flow into large cities, it's all sort of pointing in the right direction.
Okay, so for the markets here in Africa, mining, energy, consumer goods, are we going to see this year for 2018, would it be larger volumes, higher value, lower volumes, higher values like we saw in 2016?
Yes, I think again, sort of comparatively to 2017, I think you're going to see increases both in terms of volume, but also in terms of value. I think probably more importantly as well, you're going to see an increase in the quality of those deals as well. I think when you look at the construct and the approach that deal makers are taking. So you have a number of oil and gas companies effectively investing into the supply chain as a way to sort of give a boost to those sorts of projects. That helps the oil and gas industry and it helps the services industry as well. So a little bit more creativity there as well. The other thing that you're seeing as a way of sort of de-risking some of these investments is sort of co-investment, and that co-investment frequently happening off the back of sort of PPP engagement, but also increasingly so with development finance institutions as well. So the likes of AFDB, the likes of AFC have been incredibly successful at sort of giving giving investors a bit of a sort of comfort blanket as they seek to go into some of these more challenging markets.
Okay, we have about 4 minutes left. I want to, this also in the report that investors talking about the risk of getting involved in regulatory or criminal investigation, that is weighing heavily on the minds of investors. How often is that something that happens often, or it's just that constant dark cloud of risk that's always that investors, always have on their minds?
Yeah, so I think, again, it's that. So again, when you're looking at the report, I think 72% of respondents talked about this being a real concern and issue for them. It's that notion of sort of irregular regulators that people don't like, investors who are looking at sort of big, long-term, complex investments, don't like that uncertainty.
And this cuts across all the markets between...
And that cuts across all markets,
South?
I think. And
okay.
Again, you only need to look at asset reappropriation in Tanzania. You can look at disproportionate fines that have been levied on oil and gas companies. So Chad levied a total, I think, $74 billion fine. That's 7.7 times Chad's annual GDP on that country, on that particular company. So it's the disproportionality and it's the uncertainty that gets people uncomfortable. I think as well, yes, there's still this concern around Foreign Corrupt Practices Act. Okay. President Trump had spoken about it being an inhibitor to businesses, but it still weighs heavy on investors coming into the region. Likewise, so the UK Bribery Act as well, and I think you're about to see a much greater crackdown on SOEs, so state-owned enterprises out of China, really focused on compliance, really focused on the issue of sort of integrity risk. And how they engage in some of these deals as well.
Now, the report also points to partnering with local institutions, that is going to be a theme this year. Is it help us understand that? Yeah,
so I guess it's sort of two things really. So one, I think we're seeing a much greater maturity on behalf of sort of companies in helping the investment community get comfortable with some of these risks. So they really see it as competitive advantage around capturing access to capital markets. If they're engaging with their suppliers, with their clients, with their investors in an ethical manner, and one which sort of seeks to placate a little bit some of the regulatory risk out there, then that's a good thing. But equally as well, yeah, I think a lot of investment, and certainly this is an area where we heavily focus around due diligence into local partners, due diligence and correct engagement with government, with local partners, so on and so forth, is really key as part of your market entry strategy and heading into some of these locations.
Let me ask you this: what would it take for Africa to regain its spot as its position as an M&A hotspot? What would it take?
Sure. I mean, I think
I know there's so many moving parts.
Yeah, and again, you can't help but just look at the sort of geopolitics around the world, and you've got I think a much greater sort of closed trade perspective, which is coming out of much more nationalist in terms of its approach, much less sort of free market engagement when you look at the prospective trade deals between trade wars between China and the US. Again, that doesn't fill investors with sort of comfort. You look at the major investments and indeed stock listings that have fallen 48–50% overnight off the back of Russian sanctions. Again, Africa, Nigeria, markets like Nigeria, Nairobi, Kenya, actually seem pretty stable and pretty attractive in that regard. Right. So we still see huge amounts of positivity. We still see huge amounts of opportunity across the region for all the different reasons that we've mentioned as well.
All right, Tom, we're going to live with that. Thank you so much. It's been a pleasure having you on Beyond Markets today. Thank you for your time.
Thank you so much.
I've been speaking to Tom Griffin, Senior Partner, West Africa at Control Risks.